Hello everybody, and welcome to our fourth installment of our video education series. This video will go through how to create orders, creating limit orders, buy stops, sell stops, entering targets, managing stop losses. I'm going to go into a few details in this series on basically how you enter trades, how you take our signals and enter into the trade and make sure A, if that trade's going in your favor, how to capture profits and protect your gains, and B, if the trade is going against you, how to minimize your loss and to exit early. So I'm going to flip over to the charts and we're going to get into this real quick. This entire video shouldn't take any longer than 10 or 12 minutes to get through. So we're going to get started right now. As I mentioned, there are a number of different orders that you can place on a chart. So we can put market orders in, limit entries, buy and sell, buy stop entries, sell stop entries, take profit targets, which is where we think price is going to go, and that's where you want to exit. Stop loss areas where if price goes against you, you want to make sure that you protect your profit and your account, and so that if price keeps going against you, it doesn't get any worse than that level. And I'm going to talk about this here, which is 30 pips, and I'll talk about that a little bit at the end and kind of fill you in on what that means there. So what I'm going to do is I'm just going to flip over to a chart that I already had set up here. So let's say that this is the US CAD, and let's say that we put a signal out on the US CAD. In this case, we're going to look for a long signal. So we're going to look for an entry at 127.20, which is my buy level. We're going to put a target up of 128.30, which is 110 pips profit, and we're going to put a stop loss of 20 pips in here at 127.00. And actually, for completeness sake, I might actually just change this to typically match what we would put out as a regular signal, which goes back to that whole 30 pips idea, and I'll show you that here in a minute. But let's just say these are the levels. So you get your signal and you look at it and you say, okay, we got to buy on US CAD. Now what do you do? So you got a couple of different options. And when we send signals out, just so you know, we want to be buying when the market is going against us. So what I mean by that is, you see this down candle right here, this black candle, we don't want to be buying this when it's screaming up this way. Okay, if price is already starting to move up this way, we don't want to get in on that. Yes, we may be able to capture a few pips here or there, but we really want to be buying when this is going against us to maximize our buy level and our profit potential. So I'm going to assume that price is going to come down. It's currently sitting at 127.39, 127.40. I want price to come down another 20 pips to my buy level at 127.20, and that's where I'm going to get in. So this candle will be a full black candle, or maybe there'll be 2 or 3 of these candles, but we're buying on a down candle, and that's where we want to get in. So what we do is we flip over to our chart, we see the signal, and we come in and we say, okay, now what do we do? Well, there's a couple of different options. So option number 1, let's just assume that maybe the market has already gotten down to our level. So here's our entry level right here at 127.20. So what I can do from here is, let's just say again, price has already traveled down there, and I'm looking at the signal at the same time price is at 127. Great, really easy to do. I come in, I open up my order, I pick the amount of risk that I want to assume. So this is about a $5,000 demo account, so we typically don't trade with more than half a lot or even smaller to protect your risk. We don't maximize our risk potential or anything like that for any of these trades. It's not a one trade that's going to make you a millionaire. It's a series of several of trades that's mitigated risk and minimized vulnerability to the market that makes you profitable. So we select our lot size, and then we come down and we have instant execution. So you got a drop down list here. So we got instant execution or pending order. Instant execution, that's basically just a market order. So that's what I was talking about over here, a market order. So whatever the market price is right now, I want to buy it right there. And you also have to pay a premium. You have your bid and your ask, and what's called your spread. In this case, we have a 4 pips spread from where price is currently trading at 127.38. You can see it down here, it's at 127.38. If I want to buy this right now at market order, at market level, it's going to cost me 4 pips. So I'm actually going to get in at 127.42. So I'm just going to put in an order here just to kind of show you exactly what I'm talking about, to show you how this works. So I buy it right there, and you can see it got me in at 127.42. Okay, so I'm just going to cancel this order just because we don't need it in here. This is just for argument's sake. So I'm just going to close that, and that's how you do a market order. Okay, so basically market order, again, it's just buy at the current market. Now also with a market order, if that's what I wanted to do, I would also want to put in a stop loss. So our level would be 126.90 was what I had identified on this signal, is 126.90. And I want to do my take profit at 120, what was it, 128.30. Right there, and then I would just hit buy, and then we would have our take profit and our stop loss and everything all put in there at the market order, and that's how you do a market order. So very, very simple. So I'll just mark that off here, market order. Now the next one on the list is a limit entry, a buy and a sell limit entry. Now this works so you can just set it and forget it. So let's say we put this signal out at or before 12 a.m. New York time on a Monday. Well, I'm expecting that this will trigger in the New York session 8 hours later, but I can't be in front of my charts at that time. So what do? I can set something called a limit order, and it just simply means you put a level in at the specified target that you want price to go down to, and it'll instantly execute without you having to be there. So that's found right here, then in the drop-down list under pending order. Select that, and then you have options of buy or sell. So if it was a sell signal, we'd select that. If it was a buy level signal, which this one is, we're going to select that. You select the amount that you want to risk on your trade. You set your stop loss, which again was 126.90, and your take profit, which is 128.20, I believe it was 30. Change that, 128.30, and then you put the price that you want to buy it at. So in this case, we were 127.20. Okay, now just so you know, the bid price needs to get down to this level in order for the market to trigger. So what do I mean by that? Remember, we're back here where I mentioned 127.38, that's your bid, 127.42, that's your ask. Sorry, I said bid price needs to get down here. Your ask price needs to get down there. So this number right here needs to get down to that 127.20 buy area in order for the trade to execute. So that's what that means. So if the bid price gets down there, but the ask is 4 pips away, and it gets down to 127.24, the order won't trigger. So you also want to take that into account as well too when you're placing these limit orders. So again, you set your stop loss in, you set your take profit, you set your entry price, and then you set your expiry. And so we'll just set it a day in advance just because I don't know when it's going to trigger, and then you hit place. Okay, now you can see my limit order here is, I got this thing in the way. I'll just get rid of that. Okay, so now you can see all my levels that I have set up. So as the signal goes out, I'm expecting price to come down and then rebound back up. It's basically exactly what I have set in right here. Okay, you can see how price, the limit order's in. So if price comes down and I'm nowhere near my computer, it'll trigger, enter, and it should run up to our target area. Now if it doesn't and I can't be around, I've got my stop loss in 30 pips below the entry level to protect my profit. So it won't go, if price continues to trade lower than this, the most I'm at risk right now is 30 pips. So I have a 110 pip gain versus a 30 pip loss. That's over a little over a 4-to-1 reward to risk ratio. So we're doing good. Now, that's your limit orders. So we covered that. Next is a buy stop entry. So this is a little bit different. I'm just going to close this because we don't need that. So if price, let's say for example, comes down here to our level, to our buy level, which was 127.20, and we want more confirmation that it's going to actually continue to go up. But we can't, again, we can't be in front of the computer to do this. Let's say price comes down to 127.20 and I want to confirm that it's going to go higher. So let's say I want to put a buy order in at 127.50. Well, I can't put a buy limit order in when price is below 127.50 because it'll just instantly execute. I'll show you what I mean by that. So we go into a pending order. I want to do a buy limit 127.50 and I hit place. It won't let me do it because price is above the market. If I wanted to get in at 127.50, I would basically have to wait in front of a computer for price to go up there and then get in at a market entry, or I can do something called a buy stop entry. So what I mean by that is I come over here and I do a pending order again. I set my risk tolerance and I put in 127.50. Now what I do, instead of doing a buy limit, I drop down this menu here and you see I have a couple other options. I have a buy limit and sell limit, which we just went over. And then we have a buy stop and a sell stop. So I just select my buy stop, and that means I'm buying as soon as price gets up to that level, but it's above the price that it's currently at. I set the time that's enforced for, and again we set all our parameters up here. No difference. 127.20 and then 128.30. So everything's still the same, except we're just waiting for that confirmation for price to go into our trading range, and we hit place. Whoops. I gotta switch this. Buy stop. Hang on here, guys. Let me just start over on this. Pending order. Buy stop. 27. Oh, it's probably because I'm too close to the market. Sometimes you need 30 pips on some of these in order to execute it when it's at the market. So 127.60 we'll call it. On some platforms it doesn't allow you to enter a limit order in when price is currently trading within a 10 to 20 pip level of what price is currently at. So that's why I had to just increase this here, and then you can click place and you can see that one in there. And then I would have put in my stop level and my entry level, but that's, you know how to do that. You should know how to do that now. So you can see how that went in. So now price is above the market. My level is above the market. So again, price comes down, does its thing. We wait for confirmation and it starts to trade up. We get in on that up move, and then we'll let it run up to the target. And that's how you put in a buy stop level. It's the same thing if price was trading, if it was going the other way, if we're below the level above the level of where we want to sell at, we would just put in a sell stop entry, and it would work the exact same way except in the other area. So, sorry, my Skype is going here. Let me just close that. So, that is limit entries and buy stop entries and sell stop entries. Last two things I want to talk, and we kind of went over it already, is take profit targets and stop loss of 30 pips. So what I mean by this I just want to open this up quickly, and we'll just put a instant execution in, and we'll put our stop loss in. It was actually, no, sorry, you know what, we'll do a pending order. I'll just set this up real quick one more time here. And we were 126.90, and our take profit 128.30, and our entry level was 127.20. Okay, and we'll place that. Now, this is very important. We don't want to do, unless it's going to be a long-term trade, a swing trade, where we advise you to take put less risk onto the trade because we're expecting a larger range of volatility. We will typically recommend a 30 pip stop or less for your trades. We typically do not go over that, and for obvious reasons, because you know, if you don't want to be taking too much drawdown on your account. So 30 pips is pretty much the maximum. Anything over than that, we will tell you to reduce your risk on it. And the take profits, as you can see, our take profit is all the way up here at 110 pips, basically, is what it is. So that's our target. So we think price will get up there eventually. But what we want to do at about 30 pips from the level that we buy at, so about so if we get in at 127.20, we want to make sure we're taking some profits off the table at plus 30 pips. So right in here, right in this area, plus 30 pips. And that way, no matter what the trade does, we can secure some profits. Okay. Now, the next video I'm going to do, I'm going to show you how to take partial profits. So when price trades up to plus 30 pips in your favor, without having to close the entire trade down to take your profit, I can show you how to take partial profits on that. And then let the rest ride out to the full target. Now, it's very important, at 30 pips, you always move your stop loss from minus 30 to break even. That's very important. So not only does the trade go in your favor plus 30 pips and you capture some profit at plus 30 pips, but you are also protecting that profit as well. So no matter what price does after that 30 pip range, it can go higher up to our target, and that's great. We get to cash in on that. But if it goes against us, we won't give back that 30 pips that we had gained. And that's very, very important to be maintaining, staying as a profitable trader. That's the name of the game, is to always capture your profits. And we will update you throughout the course of the trade after it triggers to when to do this and how to do it and everything else. You don't have to worry about that aspect. We'll always make sure that we're managing and monitoring the trade for you, so you don't have to do it. But that is very, very important. 30 pips is the magic number. We always want to be taking some profits off at 30 pips. So that's what that means on what the 30 pips means. So again, I can go into that a little bit more detail in the next educational video that we release, and show you some in-depth partial profit taking, and also a partial stop covering as well too. So what that means when the trade goes against you, if it's a higher risk that it's going to continue to run against you and stop you out, we'll make sure that you cover some of your trade before that happens to minimize the amount risked and the amount lost, so you can preserve your capital and place it into the next trade, which is going to be more favorable. So that's all that means. So we've covered market orders, we've covered limit entries, buy stop and sell stop entries, take profit, and stop loss targets. So that's going to conclude this educational video, and we will get this up onto the website for you to access, and you can also view it on our public YouTube channel as well at Future 45 Trade Signals. So please follow us and subscribe to our channel as well there, and tell your friends as well too. The next video installment will be coming out tomorrow in 24 hours. We'll upload another one, so you can watch for that one, and we'll notify you on Instagram when that's available. Thank you very much, everybody. We'll catch up to you soon.